Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the end of the week updates on the portfolio here, as we do on a weekly basis. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as of maybe today, well, probably today, we've obviously have had a rough first 2 months. We're 11 days in, 12 days into March, and yeah, we are not seeing an end to the volatility in the marketplace. So what can you do in times like this? What is the best strategy, in my opinion? And maybe others disagree, but that's totally fine. And yeah, it is what it is. So I'll talk about that at probably the end of the video, but we will get an update here on the portfolio here. The portfolio closed out at $11,106.71 Canadian. We were up $24.21, up 0.22%. For the 1 week, we are down $90.78, down 0.81%. For the 1 month, we're down $58.13, down 0.52%. For the 3 months, we're up $447.06, up 4.19%. For the 1 year, we are up $1,662.56, up 17.6%. And for the all, we are up $2,241.55, up 25.28%. Wealthsimple Trade did a little update here, and it looks like they got icons here. The only one that is off is actually TELUS. I'm pretty sure that is the logo for AT&T, which seems... It makes sense because they both have the same ticker, except for TELUS has .to behind it for Toronto, for the Toronto Stock Exchange. But regardless of that, we did make a couple purchases today. One being in TD, Toronto Dominion Bank, closing out today at $98.06, down 30 cents on the day, down 0.31%. We now have 10 shares of this. Average cost of getting in is $87.14. Holds about 8.91% of the portfolio. Our target for that is about 9 to 10%. And our total return today was down $3.13. And our total return since starting the position is $109.24 at a up percentage of 12.54%. As we go down here, so we bought one share today at $98.49 this morning. And we didn't have enough in the cash account to purchase two. Very close, but we will be transferring some from the referral link. If you haven't used it until March 24th, the referral code is down below. You will receive 3 free stocks once you fund your Wealthsimple Trade account. The other position that we bought, and this is a new strategy for this year of 2022, is every time we buy a full share, we add $25 to an index VFV, which is the Vanguard S&P 500 index ETF, closing out at $95.16 today, down 1.55, $1.55, down 1.6%. We have 2.5 shares, holds about 2.16% of the portfolio. Our average price of getting in is $99.90. So the average is coming down. Total return is completely off, so we're not even going to look at that. But we did buy a fractional share today at $24.99 at the price of $95.80. So we got 0.2609% of a share. So that is the portfolio, everyone. I know it's been a wild ride in the marketplace, but we'll head over to trackyourdividends.com to update the portfolio here and the annual dividends. So last week, the portfolio we had at 10,800, well, that's today's number, but roughly around the 10,000 mark. Dividend yield today was 3.36%. Yield on cost for us is 4.26%. Annual income from dividends is about $365. And these are all the positions. So if you're to build a portfolio today, this is the returns that you would get roughly here at 3.36%. So yeah, so first things first, we'll add VFV real quick here, and boom, here we go. So not at the close to 11,000 mark, but close enough. This doesn't include the cash account, and it's a bit off, so that's completely fine. Today's dividend yield, if you're to build a portfolio with all the updated positions, 3.36%. Our yield is 4.42 or 4.24%, and an annual income of $369 per year. If we scroll down and go to TD, now we have 10 shares. We are making $35.60 from this position alone on a yearly basis. Of course, dividends being paid out quarterly. And we get a yield of 4.09% due to dollar cost averaging. VFV coming in at 1.19%, so you will get a higher yield if you bought it at the lowest point there, or at the end day price. And our yield is 1.13, so we're kind of backwards on this one. But we do get a dividend of $2.83 for the year. I'm not sure when that gets paid out, but I'm sure it will. So that is the portfolio. Here is the expected dividends for March. Here's for April, May, June, July, and so on and so forth. Of course, it has shifted a little bit, which is completely fine. So that is trackyourdividends.com on that side of things. And then we'll head over to ShareSite to see the performance of the portfolio here. So everything is updated already with the updated positions that we purchased today, this week. And in the portfolio today, we have capital gains of $130.26, up 1.2%. Dividends we've received total of $62.50 based off of ShareSite. That's an increase of 0.58%. And currency gain, we've received 17.46. A little bit of Forex for you, even in stocks. So 0.16% of a return, and total return this year is 1.94%. Comparing that to the S&P 500, which is down, I think, about 5 or 6% there. So I'm pretty happy with that. Hopefully we can just stay in the black and not go into the red for this year. That would be fantastic, and it make me feel good. So that is the updates, guys, for the portfolio. We'll head back here, and I guess I'll briefly talk about what to do when the market is just so volatile. The best thing you can do really right now is not to panic, because I'm sure people are panicking. I've had a few conversations with some people, and they're concerned and throwing out weird conspiracy theories. And I guess when markets are like this, the true investor really comes out of people. Their fears definitely play a huge role in a lot of their decision making, and even for me, it's kind of a concern. Like, when will we bounce back? When will that time come? Will it be 60 days from now? Will it be 180? Will it be 350? Will it be 3 years? Will it be 5 years? Who knows? But the best strategy that you can do is maybe increase your frequency of purchasing. If you're doing a regular investment plan where you're putting in a certain amount every single week, like we do, and just setting yourself up to be prepared to capture all the gains when the market does bounce back, as it always does. Now, dollar cost averaging is probably the best thing you can do at this point when you're increasing the frequency of buying, instead of buying on a monthly basis or a bi-weekly basis or a weekly basis, or however you want. Just increasing that will somewhat make a difference. And you're just setting yourself up so you're prepared for, again, those great gains. One of the things that I think some people are scared about is if they completely lose their whole investment. And I want to really hit home with this. And the only way that that's going to happen is if our government goes belly up and a bunch of companies at the exact same time file for bankruptcy. And the chances of that happening are pretty slim to none. And I'm no Warren Buffett, and I'm going to be the first to admit that. We do admire him as an investor, but I don't think I am him. Okay, I'm not him. I know I'm not him. I'm not Charlie Munger. So there was a back and forth that was happening in the comments, and I just want to address this, is that everyone has their own style. And just because they think that they can beat the market by picking their own stocks, let them be. That's their belief. And you can't assume that someone thinks that way. Maybe they're just learning the market. Maybe they think they can do it, and let them believe it. Because the best lessons are learned when you lose, right? or fail or whatever it is, or make mistakes. And so I know I did a video, the last video was on a couple ETFs, and I am biased against ETFs, and I have nothing against people who invest only in ETFs, nor do I have problems with people that are day traders, swing traders. It doesn't really matter to me. The point is that we all, I think, have a common goal, and that is to maximize our returns in our portfolios. And no one likes to lose. And you know what? If they're inspired by a man who is really good at stock picking, then let them be, because that's probably one of the things that keeps them going, keeps them wanting to learn more in investing. And so I'll be the first to say that I think sometimes we need to just, tone it down a bit, stick together, and make sure we all head in the right direction. And that goes for crypto investors as well. Any kind of investor. I think we're all trying to just do our best, stack up our chips, and live a good life. And so I just want to address that. But again, best strategy, dollar cost averaging, maybe increase the frequency of it. It doesn't have to be the amount that you usually put in. It can be a lower amount, but as long as you're capturing as much as you can on the highs and the lows, and really bringing that average down, or whatever it is that you're trying to achieve, because everyone's goals are different, that would be the best strategy in my opinion. And again, this is not financial advice, it's just for entertainment purposes only. So if you did enjoy the video, guys, don't forget to leave a like, subscribe. Other than that, guys, have a great weekend, and thanks for watching, and we'll see you in the next one. Bye.